All right, welcome back to halftime now to the ETF Edge with Leslie Picker. Picker, take it away.
Thank you, Holland. With markets coming off a tumultuous week on Wall Street, questions abound about the resiliency of the consumer in light of that Delta variant that's led to a significant repricing of growth risk. Big banks downgrading their outlooks for the third quarter. So far today, though, we are seeing the reopening trade take charge again, thanks in part to a fully approved Pfizer COVID shot, which will set the stage for more vaccine mandates. So, where do we stand on the reopening story? Well, joining me now is Brian Lake, head of America's ETF client at JP Morgan Asset Management, along with Todd Rosenbluth, senior director of ETF and mutual fund research at CFRA. Brian, thank you very much for joining us to you both. It feels like, though, we're at an inflection point for the reopening trade. What ETFs are benefiting from this recent bout of good news?
Yeah, it does feel like we're at the inflection point. I think we're seeing investors do a couple of things. One is there's always interest in income. And so, I think investors are looking for areas that they can get more income in their portfolio. One area in particular that they're looking as one of the strategies we offer, equity premium income. The ticker is JEPI, J-E-P-I. This is a basket of quality stock names, which we think matters in this market. Valuations are going to be very important. Investors should be looking at the balance sheets of the companies that they own and really understanding what the valuations are. With equity premium income, JEPI, we also do some covered call rating on this, which actually can generate some nice income here. And again, investors are looking for income on this. And so as we think about this reopened trade, this is one of the areas in particular that investors are looking. The other area they're looking is to shorten up their duration. If we potentially get news out of Jackson Hole this week where we could thinking about ending the bond purchase programs and potentially even at some point raising short-term rates, I think investors are pulling in their duration using strategies on the ultra short side. Both the JPST is an interesting strategy. It's our ultra short ETF, or JMST, which is a tax-free version of that. Those are both areas that investors are using in their portfolios.
Interesting. Kind of shifting gears to another factor, the old trope, it was when we start to see more news about the reopening, it was more value over growth, value outperforming amid return to normal. Do you think that trade still exists these days, Todd?
We do. We think value is going to return to favor. It started the year very strong. We saw rotation to growth, but more value-oriented ETFs tied to the Russell 1000, tied to the S&P 500. You have RPV, which is a pure value-oriented ETF in particular, or FOVL, which is a focused value ETF from iShares. We think the heavier financials-oriented sector ETFs are also going to benefit. A reopening is good for value-oriented sectors.
Excellent. Todd, Brian, thank you both so much for joining us today. Head over to etfedge.cnbc.com at 1 p.m. Eastern time for more on reopening trades, the rise of active management, and thematic ETFs. We'll be joined by Tina Herrera, one of the brains behind the Women's Empowerment ETF ahead of Women's Equality Day. Frank, back to you. All right.